It's been a big week for bank earnings, and tomorrow we get two more: Dow Components, Goldman Sachs, and American Express. Mary Thompson has a preview of what to expect.
The fourth quarter expected to be an up one for profits at American Express, a down one for profits at Goldman Sachs. American Express's winning recipe mixing expense controls with steady spending by its affluent client base, according to analyst Daniel Furtado.
I think the three things that myself as well as most investors will be looking at will be spend volumes, cost control, and credit performance on tomorrow's print.
Client spending seen rising 7 to 7.5% last quarter, with Amex seen delivering on its promise of capping expense growth at 3% last year. The net of these efforts expected to be a 12% rise in the company's fourth quarter profits once you account for charges Amex took in the same year-ago quarter. Revenue seen growing 5.5% to $8.6 billion. Like American Express analyst Stephen Chubak says, a key to Goldman Sachs' fourth quarter results will be how the company handles expenses in the quarter, specifically compensation expenses.
We believe that there's still going to be more meaningful comp leverage in the fourth quarter, consistent with what we've seen historically.
Meaning the amount of money the investment bank puts aside to pay employees as a percentage of revenue will fall in the fourth quarter from the third. Cutting those expenses could be critical to Goldman meeting expectations for a 28% decline in fourth quarter profits. Behind the slide in net income, a lackluster performer by a unit generating 45% of Goldman's revenue. The business, known as FICC, trades bonds, currencies, and commodities. It was the firm's weak spot in the third quarter. Weakness Wall Street expects spilled over into the fourth. For Nightly Business Report, I'm Mary Thompson.